Let me start recording. Shri Guru Bhyo Namaha. Om Shri Ganeshaya Namaha. Today's session, we are going to see improvement in Unified Pension Scheme Part 1. In a Unified Pension Scheme, UPS, the employee and government contribution of the basic plus DA is equal to 25,000 rupees is 10% by the employee and 18.5% by the government. Both combined comes to 7,125 per month. And last salary in 25 years would be 1,07,300 and the pension would be half of that. That means 54,000 rupees per month. Before going to our topic, let me give you my disclaimer. I am Brahmadesha Narasimha Venkataraman. This video presentation is for information, education and estimation purposes only and not to recommend buy or sell, invest or redeem your funds. Every investment has its own associated risks and without knowing the risk, don't invest. I am neither an agent nor a broker nor any advisor, simply an analyst with computer background. Now, let us go into the let's go into the PDF file of the presentation. Where it is? Where? This is a book on financial freedom inflapro way, volume 3, that is Financial Freedom inflapro volume 3, and subtitle was discussed yesterday, that is Agniveer, Securing Agniveer's Future, that was discussed yesterday. Today we will discuss about the UPS, Unified Pension Scheme, covered in the same book. Author is myself, bnvenkataraman, and Professor Dr. Rajkumar Deshpande, the Dean of JSPM University in Pune. This book was presented in March 2025 and revised in October 2025. Now let us go to our Unified Pension Scheme. Suggestion to improve Unified Pension Scheme. Overview. The Unified Pension Scheme is a scheme for central government employees in India that was introduced in August 2024. It was implemented from April 1st this year 2025. The UPS is an option for employees. It is not a mandatory who are already covered in the National Pension Scheme. Key milestones of this Unified Pension Scheme is introduced the same thing which I have told earlier, introduced in 2024 and implementation starts at April 1st, 2025. The components of the Unified Pension Scheme. Under the umbrella of a Unified Pension Scheme, we have monthly income based on service years, that is pension, and family pension at 60% of the employees' pension, on death of the employee. lump sum payment is also there on the time of retirement, and the family pension is, both pension as well as family pension is inflation in protected or inflation adjusted. Pension. Employees receive a pension that is 50% of their average basic pay in the 12 months before retirement if they have worked for at least 25 years. Here basic means basic plus DA. The employees who have worked for at least 10 years receive a minimum pension of 10,000 rupees per month. That is, there is a minimum pension coverage also there. Then family pension. If an employee dies, his family receives 60% of their pension. In addition to the family pension, there is a lump sum payment. Employees receive a lump sum payment when they retire in addition to their gratuity. This portion we will not consider for our improvement, just because this will stay in any case, whether before the improvement or after the improvement also. Inflation indexation. The pension is adjusted for inflation. Contributory. The employee contribution is 10% of their basic salary, and DNS allowance basic salary and DNS allowance, while the government contribution is 18.5%. Who can opt for UPS? Central government employees who are covered under NPS can choose to opt for UPS, Unified Pension Scheme. State government employees can also adopt UPS for their employees. Existing IRR of Unified Pension Scheme. With 18.5% of government contribution, the total deposit in the scheme for an employee with basic plus DA salary 25,000 rupees works out to rupees 7,125 per month. As the salary increases, let us say at 6%, the employee as well as government contribution also increases at the same phase. If the period of contribution is 25 years, the basic plus by that time increases to around 1,07,300, say 1,08,000. And minimum pension supported for this much of salary is 54,000 rupees per month. The pension is inflation protected, and that is annual increase of 6%. To achieve this pension benefit of step-up SWP pension of this at the rate what mentioned above, the IRR, internal rate of calculation, works out to 8.79% and XARR of 9.15%. The return is 8.79% or XARR is 9.15%. 7.99% is monthly compounded. We will see how it is, how we have to calculate. We will see it with my calculator. The highlight of my calculation is shown below. Before going to the how we arrived at this 8.79 as the rate of interest, we will see in the calculation. Let us see in the calculation. I will go to my calculator. Here is my calculator. This is a home page, and here is my calculator at IRR. See, internal rate of return, the calculation of IRR. Go to that place. This is general purpose IRR calculator covering for FDAs, insurance and others. We'll see this. Let us start. premium or investment paying term, that is SIP term, is 25 years of service period, and starting investment is 7,125, we have seen earlier, for 25,000 rupees basic plus DA person, and no, it is not simple increase, it is inflation protected increase, that is 6% inflation protection. Every year the SIP increases. Then this is for insurance purposes, money back, years, etc. We will skip all this. Waiting period also 0. No. At the end of the SIP period, we can start getting the return. Return is pension. Starting return is 54,000. We have seen earlier the last salary would be 1.08 lakhs, and half of that is 54,000, and inflation percent is same as 6%. And return number of years, let us take expected life as 85. Therefore, from 60 to 85, 25 years, the employee would be receiving the pension, and there will be a joint account, joint life. Yes, after the death of the employee, let us say expectancy of 85 years, the spouse gets 60% of the pension. And for our calculation purposes, the life expectancy of spouse is further 15 years. And maturity surrender value is 0. For this, this is frequency is monthly. So a monthly deposit of 7,125. Similarly, monthly withdrawal of 54,000, and inflation 6%. Number of years, SIP years 25. Then the retirement year, the retirement period is also 25 years, and plus spouse time of 15 years more. This is the standard, we cannot change it. Now let us work out the IRR. Submit. IRR works out to 8.78797%, or we can round it to 8.79%, and the annual compound works out to 9.15%. Annual compound or XIRR works out to 9.15%. We have to consider this 8.79% because we are doing the monthly accumulation. Similarly, remember this figure 8.79. Similarly, for 1 lakh person, the contribution would be the employee's contribution plus the employer contribution is 28,500 for a 1 lakh earning person, and for a 1 lakh earning person, the last salary would be 4,29,200, and we'll have half of that. We'll have half of, I will check up again. For a 1 lakh rupees basic plus works out to a return of 8.76%. We'll see how the last salary would be 4,29,200 and 4,29,200, and this would, the pension would be 50% of that would be 2,14,600. We will feed this figure, same inflation 26% and 25% retirement period, 15% spouse time, monthly, and submit. This works out to 8.76%. Please remember this figure also, 8.76% or 9.12. It is slightly less than the previous figure of 8.79. Now let us go to the calculator of pension. This again is a general purpose calculator. We'll see the here is the general SIP SWP combined calculator, and we have input corpus building term parameters. During corpus building, that is during the service period, let us take this toggle UPS on. Let us see for 25 years. Inflation is 6% and interest is, we have seen in our calculation, it is 8.79%. So monthly compounded, therefore it is 8.79%. Keep the seed capital and seed capital return as such. We are not going to fill up. Input post retirement parameters. Monthly 25 years 6% and this return is 8.79%, which I worked out the uniform percentage. And now let us come to desired menu. In desired menu, we can give either a target retirement corpus or current value of the pension or SWP and so on, or SIP. We come to this portion, SIP. SIP is the employee the contribution, both employer, it was 7,125. Already 6% step up already we are considered as input parameters. Now with the continue. Now for the 7,125 contribution, the SWP pension works out to 54,031 or 54,000 rupees and step up of 6% which I input given. The highlights is, say retirement corpus is 1 crore 32 lakh. Highlights of the company. We have got highlights and we will continue in the presentation. This is the same available here. The SIP return is 8.79%, which we have seen from the IRR calculation. SIP years is 25 years and post-retirement period is 25 years and spouse time is 15 years. The step-up percentage or the inflation percentage is 6%, both SIP as well as SWP period. Then SIP, that is our contribution, is 7,125 per month and increases up to 28,849. See, in 59th year, in 59th age, the person deposits a 28,849 and 60th year he started getting 54,000 as a pension. The current value of this pension, 54,000 and going up to 2,18,769. The current value of the pension is 12.5 thousand per month, 12,500 per month. And retirement corpus is 1 crore 32 lakh. For this, we had deposited the contribution, employees and employer contribution is only 46.91 lakh. total pension is 7 crore. These figures will not find workable. 13 years is 12 months. There is not sufficient fund is there. Sufficient. Yeah, 13 years, 12 months, that is 40 years. Okay, fine. But it's same. Because of the maturity showing negative, minus 22 paisa, it is showing that terminated at 39th month. That's okay. Let us now see the calculator shows also the build-up of the corpus as well as SIP and SIWP and so on, and the digital calculator is available. It's available for corpus building time as well as during corpus building time. It has last SIP was 28,849. That is approximately 29,000 rupees, and the corpus built as 1.32 crore. And that 1.32 crore is capable of generating this 54,000. See, we have not considered the one-time investments. Sorry, one-time lump sum payment during retirement. If you consider that, the IRR would be more. We will see that later. We will see tomorrow about that in the part 2. Now, let us go back to our presentation part of it. Yes, the same what we have seen earlier is shown in our presentation part in the book also. And in previous setup it has calculated to be this minus 436. I don't know what is the reference is. This is the summary part of it. We have seen in the book. Next is the return IRR of 1 lakh earner. The similar IRR calculation for 1 lakh basic plus DA, last salary would be 4,29,200, and 50% of this work out to 2,14,600, and for this the IRR works out to 8.76% or XARR 9.13%. However, we can consider a uniform rate of return 8.79% for 25,000 rupees salaried person as well as 1 lakh salaried person. Proposed improvement in UPS. We will cover this in the improvement portion of it in the next session, most likely by tomorrow. Let me close this video. Let me stop recording. Thanks for watching. Let me stop recording.